want to thank you so much for joining us today and welcome you into America's Retirement Headquarters, home of the Retirement Guys Formula and America's Medicare Associates with Nolan Baker and Dave Ross. 419-794-3030 is the phone number. Once again, that's 419-794-3030, online, arhq.com. My name is Chris Swan. Today on the show, should we listen to financial media stars when deciding how much we'll withdraw in retirement? They say cash is king. We're going to discuss how much should actually be in your portfolio and watch out for fees that can gobble up your nest egg, all this and more. But first, before we get started, let me check in. Nolan, Dave, glad to be with you. How are we doing today?
Doing good. Yeah, really excited about kicking off this year and hopefully make sure that we spend some time getting everybody educated about how to position their portfolios, for the year, what to look at for maybe tax laws changes, and just keep you up to date with everything. So excited to be back helping out everybody for 2024.
Definitely a lot to be excited about here. A lot of uncertainty as we head into 2024. Obviously, it is an election year, so there is that uncertainty. There is interest rates potentially coming down, probably coming down later on in the year, and then how the market's going to respond to all these things. International, there's a lot that we can't control, but as we talk about so often here on the show, control what you can control, and that starts with putting together a plan, which includes a strategy involving taxes when it comes to your retirement, because we are now T-minus less than 2 years until the Tax Cut and Jobs Act, also known as the Trump tax cut, sunset. On paper, that means that the taxes are going to increase for most Americans unless Congress acts. Here's tax expert Tim Steffen from Morningstar.
We're all fairly confident on is that nothing's going to happen in 2024 with it being an election year. I think everybody just kind of wants to ride out the election, see who's in charge in Washington come January of 2025. And from there, we'll have a better sense of exactly what might happen with this. The one thing we can all agree on is that no one wants to be the party in charge when a large tax increase happens. So presumably, regardless of how the election works out, there'll be some sort of compromise on these sunsetting provisions. And not everything will happen exactly as it's planned.
So kind of a optimistic outlook saying that, it's not going to straight up expire at the end of 2025, but we won't know for sure until after the election. In the meantime, how can you help us be more preemptive for possible tax increases in 2026?
Well, things really continue to be a disaster in Washington with the out-of-control spending that they have. If you look at the national deficit for 2023, it was $1.7 trillion. And then you compound that and you look at our national debt, if you go to usdebtclock.org, we're over $34 trillion of national debt. And that's a $264,000 per taxpayer bill. And right now our country is spending 122% of its debt to GDP ratio. And it's the largest it's been really going back to the world wars. And things continue to get worse. So, looking at the history of federal tax rates, and if you Google that and go look at the history of federal tax rates, there's been decades in the past that tax rates have been significantly higher. And Chris, as you talked about, tax rates are set to go up, for a lot of folks in just 2 years, depending upon what compromises are made. But there are definitely some very specific steps that you can take on controlling your own individual situation. So, one of the things I encourage you to do is if you haven't had yet a 2024 tax roadmap completed, give our office a call, 419-794-3030. We'll put together for you a 2024 tax roadmap. And I know you're going to be collecting your tax information here shortly, probably setting up your time to meet with your CPA. So it can be a great time to get us involved. Obviously, we're not CPAs, but working hand in hand with your accountant or tax professional to try to keep the government away from your money. The other ways that you can help protect more long-term is, number one, is diversifying your retirement savings. And this has become more popular in the last couple of years. There's been a couple of new law changes with things like the Secure Act allowing more flexibility in things like 401ks, higher contribution limits. But by diversifying your retirement savings, not putting all of your money in the pre-tax category, maybe putting money into the Roth 401k could be a good option for you. Number three is you want to adjust your withdrawal strategy for this year. So you might have last year taken all of your money out of your tax-deferred retirement account. Depending upon your situation, you might want to take some from non-retirement accounts, maybe take some from Roth. Again, knowing where you fall at in the tax bracket, where you fall at from things like Social Security taxation can help you determine how to adjust your withdrawal strategy on what account to take money from. And then, Dave, I also suggest people take a look at Roth conversions. I know the market is doing well. It's back at a high point, but for long term, a Roth conversion, again, depending upon where somebody's at in their tax bracket, could be a good area, especially for the investments that they think over the long term are going to have the biggest growth. You know, that benefit of a Roth IRA, if you meet the eligibility requirements and have it open long enough, you can potentially have tax-free money by taking it out of the Roth IRA. So those are a couple ideas that I'm telling clients on preparing for future tax increases. How about you, Dave? What are you telling people?
We have a lot of discussions with people about actually creating a schedule of these Roth conversions where you take assets that are sitting in an IRA and you do planned conversions every year. In fact, I have a couple of clients right now where we did a Roth conversion in late 2023, and then we're going to turn around and do another one in early 2024. You know, you combine converting traditional IRA assets and then combine that with a Roth 401k option that may be available in their company-sponsored plan, you can really build up those assets quickly, and those will never be required to be distributed for federal income tax purposes.
You do get some other benefits there, again, that don't apply for required minimum distributions. You know, as Scott talks a lot about on the health insurance side, it can also be advantageous for you because it may not be counted as far as the income when determining what your healthcare cost is if you need to get health insurance before the age 65. So a lot of great things, and I think the key takeaway there is now is a perfect time to get this year started off right. We've got the entire year to plan for this. So now's probably one of the best times to get your 2024 tax roadmap put together. And whether you're watching us on YouTube, listening to us on Toledo's largest talk station on WSPD, it's easy to reach out to us. And we're more than happy to make that available for you as a listener for our show.
Just give a call, 419-794-3030. Ask for the 2024 tax roadmap. You know, as W-2s and 1099s are being sent out, and you reflect on what you owe for what you have to, what you made last calendar year. Why not start developing a plan to address the taxes you are going to be paying in the years ahead? That 2024 tax roadmap available. Just give a call, 419-794-3030. You can also go to the website, arhq.com.